Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. My next guest has deep Wall Street experience. He's got his teeth as an oil analyst. So about a year ago, he predicted oil would go down. And sure enough, that's happening. They're talking about going to 2010. I mean, who knows? I'm talking about Andrew Hoffman at Miles Franklin, the precious metals people. Andrew Hoffman, thank you for joining us today from Denver, Colorado.
Always a pleasure to be here and plenty to talk about.
Well, you wrote a killer piece that said we were wrong. And basically the piece was this encompassment of how the Fed said, we're going to get this great benefit about oil prices crashing. And you were like, no, the economy's doing terrible. And they admitted that they were wrong. And tell me that are we going to get even a better bounce if oil goes to $20 a barrel? And where is oil going? Where's the economy going?
Well, obviously the importance of that piece was I was discussing how it's coming out to the whole world that not just the Fed, but all central bankers have been wrong about pretty much everything they've said. In the case of the Fed particularly, which remember is by far the most important central bank in the world because what they do has ramifications for what everyone else do, or should I say what they do destroys everyone else. And in last year, it's been 3 years they've been talking about economic recovery. And then they decide, well, we're going to raise rates just as the economy gets its absolute, as I've said, the worst of our lifetimes. And so, we're getting closer to that, what I call the Yellen reversal, when she's inevitably forced by markets to admit that they've been wrong. The thing is that piece by piece, governors, both present and former, have been, letting the cat out of the bag that they know they're wrong. Yellen in particular last year when she said, this was December of last year, not last year, but December 2014, she not only said that the fall in energy prices and export prices of all kinds would be transitory, but that the falling oil price would be a net benefit to the U.S. economy. And the funny thing is that even as they, quote, raised rates, which per your talk with Rob Kirby, has not actually happened in the real markets yet. They haven't actually raised rates. They just said they raised rates. What you've seen is in the last FOMC statement just a month ago, they actually had the nerve to say that they still believe that the oil price decline is transitory as they were raising rates. And what's happened since? As we speak on this call, oil is about to go under $30 a barrel, and it may go a lot lower because this is an historic imbalance, not just of crude oil, but all commodities. It's what I wrote about in last year's Dyer's prediction of oil, which, by the way, was, a lot of that was taken from what David Stockman's Great Deformation book was saying, that there was too much money printing for too many years and too much financial engineering and cheap and easy loans, which has created gargantuan oversupply of absolutely everything. And, in the we were wrong, you're talking about Richard Fisher, who's the Dallas Fed president who just left to be replaced by a guy named Kaplan from Goldman Sachs, literally going on CNBC and saying, yeah, we manipulated the market. We saw everything was falling and we created a bubble. And guess what? It's bursting and there's nothing you could do about it. In fact, he was as arrogant enough to say, well, now we'll see as the tide goes out who has bathing suits on as he sits somewhere in his cushy taxpayer-funded home, probably with gold in the basement. So, yeah, one by one, they're all saying they were wrong. Greenspan has said it. Bernanke is now starting to hint it. A lot of the Fed governors that are leaving are hinting it, and pretty soon the whole world will know it.
When you say the Yellen reversal, do you think there's a chance that they might actually just say, we shouldn't have raised a quarter, we're going to cut a quarter? That's what people like Egon von Dreyer says, is A, they won't raise rates again. A lot of people say that. Rob Kirby, I think, just said that that's off the table. And B, that they may have to cut that quarter point back, as Yellen hinted when around the time she did it.
Yeah, Yellen has talked about negative interest rates, as they all have, as a possibility. The thing is, again, they did not. The only reason they, quote, raised rates, which, again, I can't emphasize enough, hasn't actually happened. Interest rates in the market haven't gone up, and that's with all of the selling by the Chinese. Miraculously, the interest rates haven't gone up. And, of course, in the money markets, you haven't seen the interest rates actually raised. But the fact is that all of these governors, the only reason they even raised rates at all or said they were going to raise rates was for a credibility standpoint. I mean, this whole tapering and we're going to end QE and we're going to raise rates, it goes back 3 years. In fact, it goes back to the weekend in early April 2013 when Obama had his closed-door meeting with all the too-big-to-fail CEOs. from that meeting, the word tapering came out, and also the big smash in gold and silver that started the big decline of the past 3 years. The problem is that with all the 3 years of claiming there's a recovery and tapering and all that, we haven't seen the Fed's balance sheet reduce. We haven't seen interest rates come off of zero, and we've certainly not seen an economic recovery. So basically, they realized after spending, remember, it was last December. Here we are a year later, and if they didn't do it by year end, everyone would call them out and say, you guys were lying. The economy stinks, and you said that you were going to raise rates, and now we don't believe you. So even though the economy was as bad as it's ever been, and even since then, it's gotten dramatically worse. They said, yeah, we're raising rates, kind of to pretend that they were confident. In fact, they don't even say anymore, the economy is getting better. They now say, we are confident it will get better. That's how obvious it is. It's right in their language. And the fact is, of course, it hasn't gotten better, and it's getting a lot worse. I mean, all the things that I've been talking about for the past 2 years, but particularly the last year about currency markets and commodities, is coming true. The Baltic Dry Index at all-time low, the CRB Commodity Index at a 40-year low. I saw a map yesterday that showed that there's not a single cargo ship that's operating on the entire Atlantic Ocean right now. That's how bad things are, and it's just getting started. Remember, this is the end of the year right now. This is when mining companies and all kinds of companies around the world have to review how their year-end operations and make all the cuts, the layoffs. We saw yesterday Freeport-McMoRan is on the verge of bankruptcy. It was the largest U.S. mining company a few months ago, and now it might go bankrupt with $20 billion of debt. Arch Coal, the biggest coal company in America, went bankrupt yesterday. You're going to see more and more of this. And when you do, you're going to see a Federal Reserve faced with more and more deep market declines of commodities and currencies and even stocks, despite with the PPT attempts. And of course, Janet Yellen's going to have to come in and say, she won't say, I'm wrong, but she'll say, things have changed. There's the Chinese, or there's some other thing that's not our fault. And as a result, we have to take rate hikes off the table and start to think of all the alternative extraordinary measures that we can use, which means QE4. And no.
And I want to get back to this spiraling down, so we can connect the dots for people, because I'm wanting to connect the dots, and somebody said, well, why? So the economy gets bad, so why does that mean it'll collapse? And I said, because if you're not making money, you can't service the bonds. You can't look at Puerto Rico. So when you talk about, take this to its conclusion, so we have these huge decreases in the Baltic Dry Index. I and other people, I'm talking, just you just brought this up. All this decline, this contraction. And let's talk about the bond market. So what happens when the cash flow just stops or slows down to a trickle? What happens to the bond market?
Well, that's the problem with monetary policy that has not allowed, and financial engineering that not only has not allowed there to be an actual full recession for 15 years now, but has piled on the leverage onto it with all this financial engineering like derivatives and, of course, debt, to the point where you can't have interest rates go up at all in the slightest, because we already have the highest indebtedness in the entire history of the world, not just here, but everywhere. And that's the difference. And on top of that, you've created all this excess supply that never would have come to being, like all this oil, which is only going to get more, by the way. The supply is not going to shut down. There's everywhere, big projects. There's Iran. There's all kinds of places that are going to bring more and more oil into the market. And, I remember back in my oil days, it was shocking when I looked at the chart of oil demand growth from the beginning of time, since they found oil, like in the early 1900s. And it really never slows down. Even the tiniest blip around 9/11 or around 2008, we're talking about the tiniest blips cause worldwide Armageddon. And we're going to see more than a tiny blip right now. You're already seeing falling consumption of energy around the world right now. So I believe that when you couple that with all of the debt that's out there, there's only one way that things can happen, and that is with a full default of all these billions and trillions of debt. And of course, the only thing that central bankers know how to do is print money. I mean, if someone is coming at you, you're going to keep shooting, even if the person coming at you has a bulletproof vest. And that's what they're going to do. They're going to shoot and shoot and shoot until they hyperinflate every currency in the world.
So you think that that this is the year that they're going to go have the oh my goodness moment, and they're going to say, well, we got to come up with QE4.
Well, they've certainly had that oh my goodness moment many times over, but they've also had the PPT, the gold cartel, and their own open market operations, the Exchange Stabilization Fund. They've had all of these things at their back. In fact, today's article I just wrote was called "The Very, Very Last to Go Markets," showing how they've lost control of almost every market in the world except the handful that they fight the hardest for, like the Dow and the paper, gold, and silver prices. But the fact is, even those they're losing control of, because now you have this extreme tightness in the physical gold and silver markets, and lo and behold, even the last to go markets like the Dow and the DAX and the FTSE are falling. So it's gotten to the point where they no longer will have any cushion, anything to look at and say, hey, that's why things are okay, don't worry, because everything's falling apart now. And yes, do I predict this year? No, I don't predict anything. But when I look at the balance of evidence, it's impossible for me to consider a scenario where something extremely, extremely bad does not happen in the next 12 months. Whether it's some currency really falling apart that matters, like the euro, a black swan event, a geopolitical event, or simply the implosion of our economy to the point where the Federal Reserve is literally forced. I mean, if you're talking about a couple of negative GDP prints, for instance, and we may well get one in the fourth quarter, I mean, how can you at any point say that we're going to be tightening monetary policy? Of course you can't. So, yes, something is going to happen sometime this year. A lot already has happened in the first week of the year, and we still have 51 more to go.
Well, yeah, the worst open stock market history, the worst opening week in history is, and that to you is that has to be a bad omen for everything but gold and silver. Is that right? Or is gold and silver going to get sucked down with everything else?
Well, we just found out today that the U.S. Mint has started the year, and again, this is the U.S. Mint where people don't care about gold and silver, has started the year with at the same blistering pace that it ended last year, which was certainly an all-time high for silver of demand. Gold was not as much as its all-time high here, but it was all-time high on a global basis. In fact, just cumulatively speaking, 2014 was a record for demand for both gold and silver worldwide, which was surpassed in 2015. And there's not a doubt in my mind that it's going to be surpassed in 2016 the way things are going. And as for the supply side, well, there's no doubt that peak silver has been hit. I'm pretty sure peak gold has been hit. And I don't mean it's coming. I mean it's been hit. So we're going to see nothing but falling supply, or as far as the eye can see, probably not reversible in the next decade at least, is my opinion, because of the lack of capital expenditures we've seen for so long because of the cartel. So I think you're seeing a perfect storm of physical supply and demand meeting in precious metals, which will only be exacerbated by these trends. But economically speaking, I just can't see any possibility, even a remote possibility of things getting anything but much worse in the coming 12 months.
And when you're talking about peak silver, because for example, you were mentioning these bankruptcies and possible bankruptcies in the mining industry, silver is largely a byproduct of mining copper and other things, correct? So if these mines go out, I mean, everything goes down, right? We lose streams of copper, we lose silver, we lose everything. Is that what you're talking about?
Yeah, and firstly, when you talk about gold is mostly primary gold production, but even there, because of the lack of capital expenditure and the general difficulty of mining as it becomes more and more scarce, there's no doubt that peak gold is around here too. We probably hit it in 2015. In fact, if you look at Barrick, the world's largest gold miner, I think they are projecting like a 40% decline in production over the next 5 or 6 years. They are. That's Barrick. But silver, as you said, it's a much different animal. This is what I've been talking about forever. In fact, if you go back, you can Google it, October 2014, the Miles Franklin All-Star Silver Webinar Panel. I had David Morgan, Steve St. Angelo, Harvey Organ, Bill Holter, and myself. And we said conceivably we could see a 25 to 50% silver production decline in the coming years. And we said that 18 months ago because of exactly what you're saying. Somewhere between 55 and 60%, maybe even more, of global gold silver production is the byproduct, mostly, probably at least 55%, of copper, lead, and zinc mines. Now, these copper, lead, and zinc mines are about to be shut down en masse. I mean, Glencore is the perfect example. They're one of the largest copper and zinc miners. Freeport-McMoRan, one of the largest copper miners. These companies, people don't realize, at the end of every single year, they are forced to revalue and revise their reserves and resources, and of course do operational studies and see how much money they're losing. And they are going to now, as in right now, you're going to see it in the fourth quarter earnings, have write-downs that make the write-downs 2 years ago, which were gargantuan, look small. And they're going to be huge layoffs, and there's going to be mine closures, but really, really focused hard on copper, lead, and zinc, because there's been so many of those mines that have been built. And I'm talking about multi, tens of billions of dollars worth of mines that are sunk costs, that, they're either going to produce them because they have to, or they're going to be forced to shut them. That's going to just be capacity that sits there waiting to come on if the price comes up a little bit. So I think you're going to see a dramatic decline in copper, lead, and zinc mining in the coming years. Steve St. Angelo, you probably know him from SRS Rocco. He's, to me, one of the best mining analysts out there. And, he just this week, when he was showing me some of the declining silver production numbers, said, you know what, Andy? I think you're right. I think we're going to see a Seneca Falls type of cliff dive of silver production because of all the base metal mining. And I truly believe that, remember, this is a metal where we've seen at Miles Franklin major shortages. We had a huge shortage July, August, September of last year. We also had one in 2013, 2011, 2008. We ran out for 3 months. So we're just one crisis away from the next major shortage. And I don't think the supply is ever going to catch up to the demand that's coming.
And you think that there's going to be the black swan in your world may come from massive bankruptcies like Glencore or like some of these other big mines, that you think that you're going to have a couple of big bankruptcies in 16? Very possible.
Well, that's just from the corporate side of things. I mean, look at all the currencies. I mean, you could have major wars, social unrest. I mean, today we saw the Nigerian currency. I think it's offshore, the equivalent of the offshore yuan in China, and the onshore yuan, meaning the official in the black market. And I wrote several months ago, you can see all these currencies collapse to their black market values. And that's just what happened in Nigeria today, which everyone kind of laughs at. But Nigeria has 170 million people and is the largest country in Africa. And their black market nairas, their currency fell, I think, 20% this morning. And we saw, what was it, just yesterday, Angola, 15% devaluation. Kazakhstan had a 20% devaluation. Argentina, 30%. I mean, these just happened in the last few weeks. And soon you're going to see it in the really big countries when you see these big gaps between the official rates and the unofficial. I could see it any day now in Brazil. You're going to see it in the rest of the BRICS nations, certainly in Russia. And eventually it's going to happen here, when it gets to, as I call it, the head of the totem pole.
There's people out there that say that the dollar is the thing to have, and gold and silver is going to go to $250. Gold's going to go to $250 an ounce, and silver is going to go sub 10, and that's a terrible asset to be holding. And I say, I mean, if the bonds, we talked about this, if the bonds are no good, how can the dollars be good?
Well, look,
what do you say about that? Is gold and silver going to take a big chunk down?
Well, first of all,
with cash, or the opposite?
Well, first of all, with the dollar, I 2 years ago said the dollar is going to explode against all the other currencies. As it should, because it's more liquid. It's not better currency. The U.S. economy and financial situation is as bad or worse than anyone's out there. The thing is that it's the most liquid because it's the reserve currency, meaning more people still use it and more people still own it. So, of course, they go to the liquidity, just like they go to the liquidity of treasury bonds, because the issuer is more stable than the rest of the bad issuers. But against real money, I mean, the dollar has been hyperinflated, and that's just jacks for starters, as Bill Murphy would say. It's going to be hyperinflated even more as the Fed's last bastion attempt to save, these terrible trends that it created and cannot be reversed. Gold and silver are money that has gotten scarcer because of the gold cartel. That's what I'm talking about. For 15 years of holding down prices, supply has been diminished and inventories have vanished. As a result, you're going to see no supply coming onto the market at the same time that you're going to see exploding demand. And again, I can't emphasize enough, not only we say, quote, all-time high demand, which we have for the physical metal, but in other currencies around the world, gold and silver's, quote, bear market ended 2 years ago. I mean, if you live in Canada, Canada is pretty close to here. You're saying you're happy. You're going, hey, gold is only 14 or 15% from its all-time high. I'm happy. I wish living in the States that gold was only 14% from its all-time high. Same with Australia, If you live in South Africa or Brazil or India, the price is soaring. And so around the world, people are seeing a bull market. It's only here in the epicenter of manipulation where you have stock indices like the Dow, which still have not fallen as much as the others, and you have a gold price which has not come back like the others, but it's all a mirage. And as I wrote in today's very, very last to go, you're going to see the most important markets that are watched in the world, like the Dow and paper price of gold, eventually succumb to the forces of reality as well. And, it would be pretty shocking to get through 2016 without seeing some serious signs of that. But, I don't predict it on a day-to-day basis, that's for sure.
You're saying the next move by the Fed is we got to stop raising rates. You're saying the next move by the Fed, let's say Yellen comes out at the next FMOC meeting, after the meeting, and says, things have changed. We're not going to be raising rates for the foreseeable future, and we're maybe considering taking that quarter point off the table. What do you think might happen to gold and silver?
Well, first of all, the Fed, people need to know, cares about one thing and one thing only, and that is financial markets. They could not care less about the economy, about the people, even about the U.S. government. They care about financial markets. So if the FOMC meeting were today, say it's literally today that they were meeting, you know what? I could write the script of what they'd say. They'd say, unfortunately, global events have conspired and made things more volatile, particularly coming out of China, and therefore we're going to be a lot more patient and cautious. Meaning we're not raising rates and we're looking at the future. Now, if markets continue to fall in the next couple of weeks, like if oil is $25 a barrel and copper is $1.80 a pound, they will come flat out if they have to and say, yeah, we are very much thinking about about another round of quantitative easing, although they won't call it that. And if the Dow were falling, if let's say the Dow is down 500 or 1,000 points in the next couple of weeks before their meeting, they will just do it. They'll say, "Yeah, we're going back to zero." So,
and then what happens to gold and silver when that becomes painfully obvious?
There's no force of manipulative power on the planet that can reverse even the paper manipulation that can stop the paper unmanipulation of gold and silver if the Fed actually admits that they were wrong, and they will admit they're wrong. It's just a matter of what will catalyze it and when. And as I said, I can't even conceive of a situation where the Fed can skate through or tiptoe through or walk through 2016 without being forced to. Because look, the Fed, they're famous for pretending things. Everything's crashing around them, and then their statement comes out, and they go, "Yeah, everything's great." I mean, this guy John Williams, from
San Francisco, the Fed president John Williams.
Yes. The very guy who said we were wrong about oil prices being good for the economy, he just last week was on CNBC laughing arrogantly with Steve Leisman, even though he's been wrong about everything, saying, yeah, 3 to 4 rate hikes this year sounds about right. And, this guy is going to be right back on the bandwagon with the rest of them calling for lowered rates and QE4 as soon as the financial markets start to decidedly break from their manipulative efforts to support them.
And when they realize that, when they announce that, what do you suppose will happen to gold and silver prices? And I know you're at Miles Franken and you're the precious metals people, but you're an analyst, and so a writer, a financial writer, analyst, whatever. And so what do you suppose will happen when that realization happens of, oops, we're QE4 in it, or we're not going to raise rates, or we may even cut that quarter point? What do you suppose happens to gold and silver prices at that point? And the supply-demand curve?
I've been saying all these things long before I joined Miles Franken in 2011, but I believe, and again, it's what I believe, it's my educated guess, opinion is, if the Fed actually comes out and says something like, we're done with rate hikes and now we're moving forward with easing again, I think that the full flood of a dam breaking like in the Superman movie is what you're going to see in the gold and silver markets. I don't think the cartel would have a chance in hell of stopping the positive momentum from all the people in the world that have been counting on the Fed's credibility as thin as it is, because that will be the end of it. I've written long of the Yellen reversal, as I call it. Because once the Fed admits that they were wrong, that there never was a recovery, let alone what's going on now, I think that's the end game for the gold cartel. I truly believe that with all my heart.
Andrew Hoffman, stellar performance. Thank you for joining us today on USAWatchdog.com. Andrew Hoffman of Miles Franklin, the precious metals people. Thank you so much for joining us today on USAWatchdog.com.
Well, thanks for having me, as always.